YouTube, what's going on? Welcome back to another inter-equity trading video. Today, we have a brand new episode of the fan favorite series, Training the Eyes. Okay, this is gonna be episode 9. Oh my God, I can't believe we've already done 9 episodes of this series. Gonna hit 10 soon. What we did just hit was 20,000 subscribers. So thank you guys so much for the love and support on our videos and our channel as a whole. We have a ton of more content and value on the way. This video specifically is gonna be great. So sit back, get that notepad out, enjoy the video. We'll see you guys soon. Take care. This video is gonna be a good one. So please sit back, get those notepads out and take some notes, all right? So today we have NQ and we're gonna stay on the 15-minute time frame, okay? Remember, the sole purpose of these videos, I'm sounding like a broken record, but it's to train those eyes as much as possible, okay? The only way to do that is repetition. So that's why I make all these videos. That's why there's so many videos in this series, right? Because we're doing these things over and over and over to train those eyes. We're gonna stay on the 15-minute time frame here. Couple things to talk about. Starting off from the left-hand side, we're gonna follow along with this price action. You can see here, we had this big bullish move, clearing any liquidity at these highs, followed by a sell-off. Price ends up kind of consolidating for a little bit here, takes out a high, and then we get a big sell-off to the downside, clearing a low. Now, as you guys can see, from that point, we moved bullish, and we moved bullish quite a bit, okay, printing this high in the market. Following along, we go lower, respect structure a bit. What do I mean by that? You can see how this induces buyers into the market. So then you have buyers interested in taking positions in these regions. There's reactions, and then price goes bullish, and then keep an eye on this high right here. Why did this high print, this wick here? It simply tapped into this high to the left-hand side. This is how simple things can be. Now, we do not predict that there's going to be liquidity above this high. No, we simply let the market communicate that to us. And what happened here? This high, if you look to the left-hand side, it respected this high from the left. What does that tell us? We have built liquidity at this high. And we didn't just guess, right? We're not marking this high out guessing. And what we're gonna do is we're gonna plot a blue line here too. We're not guessing that there's liquidity above this high. No, we let the market communicate that for us. And that is very, very important. Now, following the back of that, this gives us a reason for us to trade higher one day into these highs. There's logic, there's reasoning. From that point, we sell off to the downside. We take out this low, which is fine. And then we range, and we range for quite a bit. Look at this price action we get here. This is actually almost 2 days of price action. And if we can mark it all out, you can see how the market prints this low in the market. Then we move higher, inducing buyers by taking out this high. Look how the market came down, respected the low. Look at this wick here. Respected the low, building liquidity below this low. Then the market sold back off and took out the low. This is very, very important. So listen up and listen closely. If we back up a little bit and we ask ourselves, why did this low in the market print right here? Okay, why did this low print? And we have to look to the left-hand side and see what it reacted off of. Right away, I can see that price has tapped into this low and respected it. Same concept as this. This high respected this high, okay? Now, this low has respected this low. It's very simple, very straightforward. So what can we do? Now that it's tapped into it and we've gone bullish, there's gonna be liquidity below that low. Now, check this out. When price sells back off, clears liquidity from this low, but yet it does not take out 25,551, what we have done is left liquidity at the lows. And we have to keep an eye on that because remember, our edge in the market is to buy once buyers are taken out. Now ask yourself this, has buyers been taken out if we just stayed above that low? No, they have not. I view all of this price action right here to be a trap. You want to avoid trading this price action because we are still trading above lows. Again, if I drag this red box, maybe it brings a little more clarity for you guys. You can see how we have respected it once and twice, and we've went bullish once again. And check this out. We took out this high. Again, this induces buyers into the market. So this is all going to be a trap. I hope you guys are starting to see this over and over. Look what the market does once again. We induce higher, price sells off, but still yet we're still respecting the low. So all of this above this low is going to be liquidity. Now, this is very, very important because this right here teaches you guys when to stay out of the market. And it's very simple. An easy rule to set for you guys in this specific circumstance is all you would have to do is identify where we are building liquidity in the market. It's very easy to say that this low right here is building liquidity in the market. Okay, so we mark it out. Again, 25,551. Any moves, any longs above it should be a trap. And I call that engineered liquidity. When I identified this in real time, I said to myself, it's very easy. It's very straightforward. If price comes below, and remember what I said, if price comes below, because it doesn't have to. This is not 100%. And this is something you guys need to understand. If price comes below, now I can look for a buy opportunity. And that perspective is so powerful because you'll stop caring about every little move that's going on in the market. Again, you've identified your liquidity. You want to see price below it. If it goes below, sure, there's a buy opportunity. Other things to talk about here. Yes, we have identified liquidity to the downside that we want to long below. Coincidence, what do we have right below that? A liquidity block. What is the logic behind a liquidity block? Now, not every liquidity block is going to work. Again, nothing is 100% in any strategy out there. But the logic behind our liquidity block is price printed this wick, taking out previous lows. Now, the logic is there's no liquidity below this low. So if the market comes down, runs this low, where are we going to put our stop loss? Look at my crosshair on the left-hand side. We are going to tuck it right below the liquidity block, just like this. As simple as this. Now, if we get tagged in here, you have first target, these highs. If you look at price action right now, I'm using the replay tool to kind of emulate live time as much as possible. You can see how we are building at the highs here. There's that logic. There's that reasoning. Very important. We aren't trading patterns here. We need to understand that we need to look for logic. Yes, we're looking for a long, but why are we looking for a long? Is there highs intact? Right? Is there a reason for us to push higher? And that's what you need to be asking yourself. So if we leave these highs intact, look, great first target. And then don't forget where we built on the higher time frames. Look at these highs, another great target. So I'm using these two blue lines for reference, okay, that we can target these highs. This low, remember, we want a long below it. Let's see what price does here. Okay, so there we go. Price tags us into a T. It comes a little bit in drawdown. And if I actually remove this tool, I'm going to show you guys something a little powerful here. And we're going to zoom in. Look at my crosshair. Right here, it's 10:45 a.m. What happens at 11 a.m.? We get an hourly closure. So look at this. Price is moving bearish through 10 o'clock. As soon as 11 o'clock opens up the new hourly candle, we stab out previous hourly low. And now the bullish move starts occurring. Where's our entry? Our entry is below this blue line. Let's plot it on again. So there's our entry. Stop loss, look at our crosshair, goes below the low to the left-hand side. That's always going to stay the same. Maybe if you guys want to do a partial point, that's a valid partial point right there. And then, of course, you have the highs as well. So just like this. Let's see what occurs. This is actually very important. Okay, and I get this question a lot. I'm going to delete the buy tool just for now to clear up the chart. But everyone always says, oh, Marco, what time frames do you use for this? What time frames do you use for that? Check this out. It's very simple, but so powerful. I think we can all agree, if you look at this price action right here, it's very squeezed up, okay, very bunched. It's hard to understand what's going on. So go to a lower time frame. That's all I do. Now, look, on the 5-minute, it makes more sense. Look what we've done. We've taken out a high. Price comes down. This low respects this low. So what has that done? It's built liquidity at the low. So plot a blue line here. That identifies for us that we have liquidity below this low at 25,610. What a coincidence again. Check this out. We have a liquidity block below. Would you look at that? A possible scaling opportunity. Entry would be at the low, stop loss below the liquidity block. And in this example, I would not be partialing at this high. Why? Because it's only a 1 to 1.6. So what I would do is as soon as this high is taken, I BE my entry. That's fine. And then I'd hold to my actual full target being up at the highs. So I'm going to plot on both buy tools. You have the extreme entry being down here. Perfect. And a confirmation based entry that's taken off the 5-minute chart is right here. Okay. So look what we do. We build liquidity again at 25,610. Price comes down and tags us in. So I'm going to move this tool over. There we go. We're tagged in our second entry. Remember, we need logic. Why are we going up? Now, we can all agree that we see some form of liquidity to the upside. We see sellers left in the market to the upside. So we want to target that. Okay, there's our logic. There's our reasoning. This is not a pattern. Okay, you guys need to understand that. Forget that pattern perspective. That's not what we're doing here. You need to understand the foundation, the logic behind these moves. Extreme entry tagged in. Now we have our pullback entry tagged in. Let's see how this plays out. And boom, just like that. Partial point, first hit here at 25,745. And now we're hunting for that higher time frame target. Let's play it out. And boom, just like that. Okay, clockwork. I hope you guys are starting to see the similarities between these entries and previous entries I've shown you in the past. Okay, remember, don't take them, hold them side by side and look at them from like a pattern perspective. No, you need to understand the logic behind these charts, what I just took you through for the last 10, 12 minutes. Okay, I hope you guys enjoyed this breakdown here. All right, guys, if you enjoyed today's video, please leave that like, comment down below what other videos you want to see from us, what videos you enjoy, so maybe we can make more of those in the future. Without further ado, guys, we'll talk to you guys soon. All the best. Take care.